Just like I mentioned in part 1, Zakat is quite a lengthy topic. So we have divided into 3 sections. This one is part 2, and it covers Zakat base for companies, like what is the amount on which the company is supposed to pay Zakat or calculate Zakat. AOF's Sharia Standard 35 covers Zakat in detail. This standard provides guidance regarding Zakat base, detailing different types of zakatable assets and liabilities. Accounting and Auditing Organization of Islamic Financial Institution, or AOFI, had FAS 9 published to cover finance reporting of Zakat, which has been superseded and exposure draft is being finalized. The institute or company or business shall pay Zakat, and its executives and ultimately shareholders are responsible for this Zakat. Holding company and subsidiary company. Subsidiary company is to calculate Zakat based on the method provided in FAS 35. However, the liability of Zakat payable has to be distributed among the holding companies. So the company A, which is a subsidiary of company B, while the company B holds 75% of company A, is liable for 75% of the Zakat payable on behalf of the subsidiary. The rest of the 25% is to be distributed or payable by other holders of the subsidiary company. Zakat base for companies is calculated based on components of its financial statement. Fixed asset include operational fixed assets, such as the premises, institutions, and everything. Zakat is not obligatory on operational asset and on the income generating asset if such assets are not acquired for trade. However, Zakat is obligatory at the end of the year on the unexpected portion of the rental income generated by these assets. Non-current liabilities include the debt arising from the purchase of non-zakatable fixed assets. Therefore, they should not be deducted from the Zakat base. Islamic banking and finance principles and practices levied on the exact amount of zakatable assets per share. It is not possible, then the amount is reached through estimation. Zakat on liquid or current asset. Liquid asset concept is similar to general accounting practices, which is something that is either cash or can be converted into cash easily at a fair price. So liquid assets include cash, gold, silver, bank balancing, scoop or similar certificates, as well as articles of trade. Zakat-based calculation requires classification of liabilities into current and non-current categories. The current liabilities include the balance of current account amount payable to the creditors of sold goods, creditors of purchased goods, payment papers, short-term loans, overdrafts, and accrued expenses, prepaid incomes, etc. All the current liabilities should be deducted from Zakat base. Non-current liabilities include the debt arising from the purchase of non-zakatable fixed asset on debt. Therefore, they should not be deducted from the Zakat base. Zakat on provisions and reserves. Provisions present the amount retained from revenues at the end of the financial period, so as to cater for probable shortage of assets to meet unforeseen commitments of the institution. Provisions related to fixed assets are not deductible from Zakat assets. Provisions relating to current assets valued on market value are not considered as part of liabilities to be deducted from zakatable assets. For current asset valued at book value, difference between book value and market value should be deducted from asset base. Reserves are the amounts deducted from profit by virtue of law or as required by the Articles of Association of the institution or on the basis of decisions of General Assembly. As per Sharia, both types of reserves shall not be deductible from zakat base because they are not considered to be debt obligation of the institution, although they are considered as liabilities. Since reserves are owned by the institution, they should be subjected to zakat as per the zakatable asset in case of applying the net asset method of zakat assessment. We'll discuss net asset method in a few minutes. There are two methods of calculation of zakat for institution: net asset method and net investment assets method. In net asset method, zakat base equals zakatable assets minus zakat liabilities payable during the financial year as at the date of the balance sheet, which includes installments of liabilities of the financial year, minority rights, non-restricted investments, sovereign rights, work rights, charitable rights, rights of the non-profit earning organization that have not specific owners. Zakatable assets include cash and the like receivable, minus any doubtful debts, asset prepared for trading and financing assets. Deduction from financial assets include fixed assets relating to them as well as deductible allocation. In net investment method, zakat base equals to paid up capital plus reserves, provisions which have not been deducted from assets, plus retained profits, plus net income and liabilities which are not payable during the current financial period as at the date of balance sheet. It also includes total installments of the coming financial period, plus net fixed asset and additional investments which are not for trade, such as real estate for leasing, and any carried forward losses. This gives us zakat based on net investment asset method. Thank you very much for watching. There is one thing I would like to mention, that the zakat base calculated under these two methods will lead to zakat rate, and we will discuss zakat rates and its calculation in the upcoming video, which is part 3 of zakat series. Thank you very much for watching. Any questions, please email us at info@ibflrc.com or watch and subscribe to our channel for upcoming videos. Thanks for watching. Bye.